All right, guys, hope you had a great weekend. Jumping right into it. Peloton had some interesting news over the weekend, which is that they're possibly doing a recall on treadmills. That could be a massive, massive hit to them. So I expect to see a big pullback in the stock this week. Looking at the chart here, likely going to go below 100, I would say. Possibly test that 80 area, which is support from over here. I'm not sure how to play it because Ivy will probably be sky high at open tomorrow and it'll probably gap down. So chances are it won't be very actionable, but yeah, just a little thought right here on Peloton. I do expect it to fall to at least 100, possibly as low as 80 on this news. It's going to be a massive, massive loss for them because they got to, pretty much buy back all these treadmills and issue refunds, which is going to be very expensive, right? I believe a child died at the hands of one of the treadmills. He got stuck underneath it, so that's why they're doing a recall on him. But yeah, keep an eye on this because it should be a pretty decent short candidate over the next few weeks. And again, support would be first 100, then around 90, then around 80. Failing that, it would be 70, obviously. So $10 increments support. I expect it to open around 100 tomorrow and possibly drop as low as 90 or so. Moving on beyond that, looking at a play that was beat up heavily last week, Editas Medicine. You can see the massive volume candle on Friday. It fell from about 41 on Thursday down to a low of 34 or so on Friday. That was all due to a downgrade by a Goldman Sachs analyst. This analyst isn't that great overall. He was with, I believe it was Baird, and he downgraded Editas on November the 6th, which was somewhere around over here. Where was it? It was somewhere around here, I believe, or sorry, November 3rd. And obviously, you can see what happened after he downgraded them to a price target of $14. They shot it to almost $100, right? So don't put too much credence into a downgrade from an analyst that doesn't understand CRISPR, obviously. I think that around 30 would be a great buying opportunity for Editas, assuming that you understand CRISPR and are willing to wait long-term to get some rewards, because this has potential to easily 5X from that price to about 150 a share, I would say, in the next couple of years, assuming they meet milestones, right? So obviously do your own research, understand what they do, understand what they're developing and the potential behind their medicine, which is CRISPR. And if you believe in it like I do, then obviously put your money where your mouth is if you want, right? But do your own research, manage your own risk, right? Next up is Alibaba. So they settled their deal with the Chinese government last Saturday, sorry, and they were fined, I believe it was about $3 billion overall. Stock price reacted very positively on that news. So we actually had a nice pop up from prior Friday close at 223.31. We opened up at 245 or so, and we closed the week at 238. So nice little consolidation week after a pop up. I expect to see some further price action to the upside. Around 270 is my next target. That would occur over the next month or so. They are very undervalued right now, given that they are one of the largest companies in the world. Just for comparison's sake, right now, their forward price earnings ratio is 21.54. Current price earnings ratio is 26.91. Market cap $646 billion. Net profit right now $24 billion, and sales of 98 billion. Just contrasting that with Amazon, for example, who is doing less in profit right now. So Amazon's doing 21 billion in profit, a lot more in sales, obviously, but 4 times the sales, but they're worth about 3 times that of Alibaba, right? So there's a big discount on Alibaba stock because it's from China, right? I think that we're going to see a pushback up to 270 in the next month or so, and then beyond that, anyone's guess, but I would assume that it pushes back to all-time highs again in the next few months, probably by the end of this year, I would say, right? Looking at one company reporting earnings this week, Netflix reports earnings, I believe it's on Tuesday after market close. They have been making higher highs and higher lows all year, pretty much. Last 2 weeks have been consolidating between 540 and 560. Expect to see a decent sized move on that this coming week. So the expected move this week on Netflix is going to be approximately $40 in one direction. So upside would be around 590, downside would be around 510-ish. And that's what you can expect to see happen on Netflix over the coming week or so. So again, that's Tuesday night after market close. if you wanted to trade this, again, I'm not sure what direction it's going to move in, but there have been rumors that they've been losing subscribers to other platforms as the competition heats up a lot. So don't be surprised to see them miss sub numbers. That's my 2 cents right there. They could fall, but if you want to trade them using an iron condor with the IV very elevated, again, you can go out of the money. I'd probably target the 0.15 delta on each side. So on the put side, you go with the 510 short, and then you go long the 505 or the 500, depending on how much risk and reward you want. If you're shorting the 505, you're going to get less credit overall, obviously, but less risk as well. And then on the call side, do the same thing, go up to the high strike of 590, so $40 in the other direction. You short that, and then you go long the 595 strike over here, right? Overall credit received would be roughly $1.50 or so, midpoint. And your maximum risk would be $3.50. And so anywhere between 590 and 510, you're making maximum profit. This is 1 week out. So obviously you want to look at the price on Tuesday before market close, see where it's trading at, price out the expected move, and then go to the 1.15 delta on each side for both the call and the put, right? That's an iron condor right there. Obviously, make sure you understand what you're doing before doing the strategy, as there is assignment risk as well if it goes in the money. Don't do it if you don't understand it, okay? And next up, we're looking at, let me see, AMD. So AMD, over here. Netflix. AMD had a decent week last week, all things considered, given that on Monday they fell due to NVIDIA press release that they were getting into the server space. So stock price fell from previous Friday's close of 82.76, fell on Monday to a low of 78 or so, recovered nicely to 82. I expect a push up into next week, which is when they report earnings. And the push up would probably be around to the 87 to 90 area, possibly. That's my target short term. If they do have a great report, I see them hitting all-time highs in the next couple of weeks, right? So keep an eye on AMD here. I think it's a pretty nice bullish setup overall. And I think we're going to see higher highs on the short term and higher lows as well, right? So 75 area, very heavy support, as you can see over the past 6 months. It's tapped it 1, 2, 3, 4, 5 times, held each time, bounced back up again. Each time it's bounced, you know, an average of here 20%, here was a high of 30%, here it bounced 26%, over here it bounced 15%, over here it bounced 12%. And then now, obviously, we can see it bounce perhaps as high as $90 in the short term, I think. That's where I'd probably refrain from taking a position at 90 or so. If you're already in it, then you're looking pretty good if you bought in below 80. If you're not already in it, obviously manage your risk better, because your setup is not as optimal as someone that bought in below 80, for example, right? Or around 75. Otherwise, looking at a few other names right here. So one thing I was looking at too was the retail ETF, which has gotten way ahead of itself, I think, right? Here's the XRT retail ETF. You can see how it's traded over the last 5 years for perspective. And you can see where it traded prior to the market crash last year in March. It was only at $46 or so prior to the crash, fell as low as $26 or so. And it's already at $93 from the bottom. It is now up approximately 300 or 280%, right? That's pretty absurd, given that retail is not doing that well overall. Last week, data was pretty good overall for retail. But that being said, this doesn't justify the movement we've seen in XRT. So keep an eye on XRT, obviously. Not a terrible idea to look at some bearish positions, especially as markets are at all-time highs. I would be very cautious where we are right now, which actually brings us to the next topic of conversation, which is SPY, right? So SPY is now on a pretty good tear, and going to the 1-year chart, we can see that over the last couple of weeks or so, it has rallied about 9%, right? Almost no pullbacks. The key thing to look at right here is that we do have a pretty sizable gap on the chart, which is right around the 400 area. So the gap to fill is at 400.61. I do expect a pullback of about 4% at least to meet that gap fill right here in the next probably 6 weeks or so. So by the end of May, I would expect this gap fill to occur. Obviously, the higher we go, the faster it could be on a pullback, and that could be a catalyst, a catalyst for that could possibly be Ukraine, Russia tensions, China, Taiwan tensions, for example, right? There are many different catalysts that could come out of nowhere and would surprise a lot of people, right? The market is not pricing in risk right now. IV is very low. across the board, and things are upticking on low volume. So trade cautiously, and if you're not already long, solid assets, then I would say to wait for better opportunities. Remember that the best way to make money in the markets is to buy great assets at low prices, right? Not buy expensive assets at, quality assets at pricey prices, right? If you're doing that, you're doing it wrong, and your asymmetry risk is not very good, right? So over here, I was looking at a few put spreads last week on SPY. If you're not very heavy right now in the market, then obviously I wouldn't really just hedge or hedge for the sake of hedging. But looking at SPY here, you can see that there are some great plays to be had for good asymmetry of risk. For example, if you go with the 400, 390 put spread over here, you're risking only about $1 to make maximum profit of $9, right? Now, obviously, the probability of profit here is only about 20%, which isn't that high, but you have 30 days or so for any kind of pullback to occur, in which case the IV will spike, and then this position will at least double in value to about $2. At that point in time, you sell half your position, ride the rest to fruition. If it falls down to below 390 and you're lucky, you make a nice big return there. If it doesn't fall down, big whoop, you break even, right? So that's how I would probably look at hedging if I was long a bunch of assets. I myself am lightening up my positions, especially on positions that I'm not very confident in. So as we rise higher and higher and higher, the deals are more sparse, and you got to find better value, right? So right now I see value in Bubba, in AMD. Apple was good value at around 120. Now it's around 135 almost. So as it pushes higher near all-time highs, the value is not as good there, right? Obviously, that doesn't mean that it can't go higher, obviously, but the key thing to remember is that you want to buy quality assets at low prices, not at high prices, right? It's all about asymmetry of risk. When you're buying Apple at 120, you know the downside is around maybe $5, whereas the upside is 15 to 20 bucks at least. And as we've seen in the last couple of weeks, we've seen Apple go from 120 to 135 or so, right? So SPY is for the coming week or so. Actually, I'll price out the expected move for the next month, right? So for the next month, the expected move on SPY is about $14 in one direction, right? So downside 403, upside 431. Now, it would be kind of meme-ish to see us hit 420 on Tuesday, which would be 420 as well, right? You know, everyone loves their memes, right? So that's what I'm looking for on Tuesday, possibly a push up to 420-ish, but that could be a top right there. I thought the top would be around 415-ish. Obviously, I'm wrong, but I do think we're going to see a pullback in the short term, and earnings could be a catalyst for that. As we saw last quarter, numerous corporations beat reports by a nice margin, like MSFT beat, Amazon beat, Apple beat, AMD beat, NVIDIA beat as well, and they all fell after earnings, right? MSFT actually recovered right after that, but the rest of them actually fell post earnings. Amazon obviously fell because of Bezos departing as CEO. That was part of the reason that fell. But keep in mind that as valuation gets stretched, we can see a nice pullback pretty quickly, right? So be very cautious. Otherwise, looking at Chipotle Mexican Grill. So that was the last one I want to look at before we break off. That was CMG. So CMG, they report as well this week too. CMG, one sec. So they've ran pretty heavily the last year or so, trading at $15.40 a share, and they report earnings on April 21st, which is Wednesday after close, right? So for CMG, options are pricier because obviously it's a higher price stock. The expected move on CMG for this coming week is, I will tell you right now, 1540. So about $100 in one direction. So upside 1640, downside 1440. It is a pretty heavy mover overall. So keep an eye on that on Wednesday after close. Obviously, as I mentioned, there's not a lot of open interest on the contracts here. Or sorry, this is actually for May 14th. Let me go back to the 23rd. So sorry about that. The actual expected move is about $75 to $80 in one direction. So upside again, 1620. Downside would be 1460 or so, right? And again, you can see that the open interest isn't very high. Volume isn't very high either. That means that liquidity is pretty poor. Spreads are very wide here. Not much to do really on this. You know, I just thought I mentioned it because someone asked me about it. So That's pretty much it. Otherwise, looking at XLE and XLF as well, they've been doing pretty well. Let me pull up the chart on those, and then that will be it before we do Q&A, guys. XLF, you can see financials all reported in the past couple of weeks. They all did pretty well, and we're trading at all-time highs on XLF right now. This is the financial ETF, up pretty handily over the last couple months. You can see that back in end of January. From then on, we're up about 23% or so. Pretty strong performance on financials. And then here's energy right here, XLE, right? XLE performed pretty strongly as well from late October last year to the high. They're up 105%. Since then, they are now down about 11% or so. And keep in mind, if anything happens with Ukraine and Russia, you can expect energy prices to rise with oil, right? So keep an eye on XLE. A lot of the names are still undervalued longer term. And then also there are some names that are undervalued as well right now that have been beat up, like First Solar, for example, right? Alt energy stocks were pretty beat up over the last couple months from their highs. First Solar tapped down as low as 70, recovered, and it's holding support at 75 or so. Upside short term is about 90. And this coincides with Sunrun, which is another solar company as well. They hit below 50, which is near their support, bounced off that 45 area, and now they're back at 52 again. They had a strong day on Friday. They were up about 10% on Friday or so. So keep an eye on these names as well. Among others, there are other names to look at. If you want to trade the whole ETF, which is the alt energy ETF or solar energy ETF, it's called TAN, and you can see that it's down from about $1.20 or so back in what was this? This was in mid-February. It's down, what, 34% or so. So not a terrible sector to play right now, given that it's beat up a lot, right? I see some good value here overall. I do like First Solar the best out of the bunch, but Sunrun's doing pretty well as well. And yeah, that's pretty much it. So if you guys have any questions at all, drop them below. And if you want to share the video with someone that you think will find value in it, by all means. Otherwise, have a great week, guys. And we'll do Q&A right now, okay? So I'm going to break off the recording.